move our focus rather and take a look at the latest financial news driving the Nigerian fixed income space. And for that, I have Lyobosa Evbosomon joining me. She's the head fixed income trading at Dunn Loren Merrifield. Well, thank you so much for joining us, Lyobosa. Well, let's start with an update on how the Naira is faring today.
Okay, at the FX market today was WD. CBN offered about 400 million and they sold about 371. That closed at an effective rate of 157.3. At the secondary market, the market closed around about 158.3. What we've noticed is that in the FX market has relatively been stable, and this is probably due to the fact that CBN consistently meets demand. And as well, being the end of month, we expect inflows from oil majors, so you might not necessarily see fluctuations in the market. So we depict that the market will remain stable.
All right, well, in the week ahead, there will be OMO bills, maturity worth about 198 billion naira. Now, can we expect liquidity levels to remain elevated, owing to the effect of these maturing securities?
We do not think liquidity levels remain elevated because there will be a debit for WDAS that was done today. And as well, I mean, if the CBN thinks that there's excess liquidity in the system, I think they would definitely issue more OMO bills to take out whatever form of excess liquidity we have in the system. So you might just pretty have a flat Naira market in terms of liquidity.
And now more cash may be injected, through the buyback of AMCON bonds, rather, from banks' balance sheets. Now, do we expect more liquidity in the financial system in the medium term?
In the medium term, I mean, if we look at the agenda that has been discussed over the AMCON redemption of bonds, we've heard that the AMCON would definitely redeem their bonds that are looking to mature 2013, 2014. However, they're not going to be paying off the entire 3.6 trillion that will be maturing. We've heard that the CBN will definitely step in to refinance some of those bonds. So we might necessarily be seeing a form of asset swap between CBNs. And we also know that they will be issuing short-dated instruments to holders of current AMCON bonds. So you might not see the physical cash hitting the system. It might be more of short-dated Treasury bills that will be issued to holders of these bonds, while just maybe some form of, I don't think it's significant enough to change the direction of the market. However, should we have a situation where we have excess cash hitting the system, I think that the CBN will definitely deploy their monetary policies to take out this excess form of liquidity.
Now, the Debt Management Office, plans to access more debt from the international market, following the federal government's resolve to reduce domestic borrowing in the second half of 2013. Now, how will this impact on the demand for domestic bonds?
Two things I would like to look at. You want to look at the current demand as it is today, which is little or non-existent, because we've not been seeing the demands we used to see from the foreign investors, and we haven't seen that domestic demand from our PFA investors and from banks as it were. We've seen like a significant drop in demand. However, be that as it may, if we still have these bonds trading at this current yield, we are talking about between 11.5 to 12.3 levels, we might see a significant increase in the demand for bonds. Even if not coming from the foreign investors, it might definitely originate from the domestic investors. Now, we also want to look at the yields, that the current yields of the euro bonds as it were today. You're looking at 4%, 6%, and if, for example, a foreign investor has an outlet of 11%, and this is assuming that yields are still at this current levels, looking at the second half of the year, you might find out that foreign investors might still opt to buy instruments that are trading and giving them a significant return way above 11%. So yes, I think in some form of way, you might see an increase in demand for domestic bonds.
All right, now you mentioned something key. You said you might see, an increase in demand originating, from domestic investors. Can you elaborate on that a bit?
Now, this is as an offshoot of, I mean, it's just the demand and supply relationship. Now, if there's limited supply, it definitely means that you might see an increase in demand for the existing bonds as it were. Now, I have based this on an assumption of the bonds trading at these significant high levels, which is probably above 11.5 to 12. So I'm saying that if you still have these yields come second half of the year, I mean, it's a no-brainer for any investor to buy these instruments. So yes, you might see PFAs begin to look at this, and a whole lot of other investors.
Right now, with the economic data, releases behind us, the fixed income market will likely be influenced by the CBN's open market operations, and which points to some volatility in the Treasury bills market. Now, with rates at the current 11 to 12% range, do you think it provides good re-entry points for investors?
If you say good re-entry point, I mean, for every investor, I want to believe that for every investor that has a portfolio that he's managing or has a book that he's maintaining, you're also working within limits. So what we are saying currently is that a lot of investors are up their limits. So we are not even saying that demand, even at the bond auction or even at Treasury bills, at the Treasury bills auction, because if we're aware, the one-year Treasury bill closed at 11.97 on Friday, and today being OMO auction, I mean, typically you expect that investors will want to take advantage of OMO auction. But what we experienced today was that the CBN offered 100 billion for the 178 days, but ended up selling about 85 billion. So what that tells me is that is either, I mean, so what that tells me is that most investors are really not on the buying side, as it were, irrespective of where the yields are trading. Because off the top of my head, I would think that a 12.3 discount rate for a 178 bond, a 178 Treasury bills should be a reasonable buy for most investors. But we did not see that play out today. So you might want to also look at the limit factor coming into play here. So if they already full their limits, there's little or nothing they can do in terms of taking up extra securities.